Edutrainment Workshops, the insurance industry's leading education and training platform, presents Life Insurance, the entry-level series, the products, the underwriting, and the planning applications to position your practice as the premier provider of insurance products in your community. Get on board, get on track, get to where you're going. And now, your Edutrainer, national insurance columnist, Steve Savant.
Well, welcome everyone. I'm Steve Savant, your Edutrainer and coach in our Edutrainment Workshop series, the entry level into life insurance. And all this week we're doing our introduction into current assumption universal life. And we've been speaking about this for what now, almost about a month and a half, about you going out and downloading the Eclipse software from Lincoln Benefit Life, our sponsor, an Allstate company. And we really are high on this because it really walks you through some mechanics. Today you're going to see some really great layout. It's just a great vocabulary, great understanding. It's in English, believe it or not, easy to comprehend and easy to use with your client. You just hop out on their site, www.lblsales.com/ETW. That's www.lblsales.com/ETW. And as soon as you come out here, just hit Run Installer, download the software, and then anytime you're watching our videos and we're using their software, please feel free to hop on with us and go page by page. We found it to be a huge learning experience, a great tutorial, and really, you're going to really understand how to not only be an illustrator and illustrate this, but there's so much good stuff inside this. You'll just want to be able to have that software with you as a good training tutorial. Number two, another thing Lincoln Benefit is giving for our workshop as a sponsor is they have a huge web of good prospecting tools. And again, it's right on the bottom of your screen. It's kind of a lengthy, long URL, and you'll be able to also see it on our search engine optimization. If you come out and you see the actual description, you can pull it off of there. And on there is the Facts of Your Life booklet. It's a great data collector. And I mean, this thing's thick, and it's right. It can either come in book form or you can get it in an electronic form. Either way, it's excellent. But the real cool tools that I like are the prospecting letters and the prospecting postcards. So if you say, boy, I really like to be able to do something right away, it's a little bit of marketing, no problem. There are some good boilerplate. 8 to 10 of these are out there. Remember, it's past the compliance of Allstate, but if you're with some other company, you may still want to submit that to your compliance officer just to make sure that this letter or postcard is going to be okay with them. So that being the case. And remember, if you've missed any of our other basics website or our workshops, you can go out to our website at www.brokersalliance.com. As soon as you come to our homepage, you'll see the Business Insurance Zone playing in the upper right-hand corner. And at the bottom, you'll see right here below it, the red button, the on-demand video button. Just click it. You go out to our archives and catch any of our shows. Easy to see, easy to do. By the way, when you're thinking about this, a lot of people are saying, Steve, we really like some of the material. Remember, you can order the Life Insurance Manual, the vocabulary. It's really great. That vocabulary pages are great. And any of the ancillary docs that we have up here. You say, Steve, I saw your show. I love that doc on, like Monday's show, we did the current assumption UL as a basic graph, basic understanding. I'd like that, not a problem. Just go ahead and order it at TheBiz at brokersalliance.com. That's TheBiz, TheBiz at brokersalliance.com. Well, today we're going to hop back out onto the Lincoln Benefit software site so that we can actually look at a few things. And we're still kind of a continuation of yesterday. We're still on this, but I want to talk a little bit about some of the statements, some of your understanding. We've been talking about it since the beginning of the workshop series, but I want to be able to start to unpack some of this and really give you an opportunity to really understand it. Now, the first thing we're going to talk about here is a summary of tax advantages. Notice that a death benefit can generally go income tax free. There are a few anomalies to this, and you got to remember, make sure that you're saluting the flag on regulations and tax issues. And if you're not knowledgeable, always go out and seek out your tax counselor or tax attorney, CPA, somebody that's really an authority on taxes if you have any questions about how this works. But in general, death benefits go tax free. So when you think about, should I give my portfolio, like I just saw this case the other day, should I give my portfolio to my children, but I can't gift it because it's over the line? Would it be better and cheaper to send it through life insurance, tax-free to them rather than worry about the capital gain treatment that they would actually incur. It's just a thought. The death benefit can go free. There's tax-deferred cash value. Now, when I mean tax-deferred, that doesn't mean tax-exempt. It doesn't mean you'll never pay taxes. It doesn't eliminate taxes. It just means you're deferring them. You're pushing them off to a future date. Deferral can be a positive issue. The longer I go to a hold position by accumulating cash, the greater this is not going to, well, first of all, it's not going to hit my 1040, so it's not going to be, I'm not taking constructive receipt, I'm deferring. That could bring some tax advantages, especially if you're in a retirement, because none of this is going to hit your Social Security while it's in the accumulation mode. And just heads up, the provisional income test for Social Security, page one, both tests will test for, are you making enough income? And so when you look at tax deferral products, tax deferral product could be advantageous if you're waiting to pick constructive receipt of these contracts or these cash values. It'd be great because your Social Security would come to you unencumbered, at least by tax-deferred vehicles. It could also be an estate tax-free death benefit, depending upon the size of your estate, the owner of the contract. All those things matter. So you'll want to always look at the summary of tax advantages, because you'll also, if you accumulate, you'll be able to have a supplemental retirement income scenario that you could take out tax-free through withdrawals to basis and policy loans to gain, as long as the contract's kept in force for the life of the insured, and you take appropriate withdrawals and policy loans in the years that they permit it, so that you don't have an ordinary income tax event. Now, what I like to do is, sometimes when I look at this, the basic idea, what are the notices? Who's this prepared for? Now, in this case, we're doing it in the state of Arizona. And every state, you want to make sure, is this contract, or whatever contract you're using, is it already qualified to be sold in your state? Generally, most of the filings, by the time it gets to our door, it's pretty much all the way across the board, except for New York. They may have some anomalies in Puerto Rico, but basically, you want to make sure though, and most software will say, oh, it is or it isn't, so always check. When I'm looking about it, they also give a little basic idea. This product is a flexible premium adjustable life insurance product issued by, in this case, Lincoln Benefit, and is available in most states through form, and they give you their form, and I like that because I'm saying, this is the product, let me match up the application form. I like to be able to match that up. Time and again, we've used sometimes the wrong form with the wrong product, and it causes problems, and we have to rewrite it again and do it correctly. Then, when we're looking at this, it's going to tell me what underwriting class. Now, if you recall last week, I really enjoyed the comparison between all the underwriting classes, their premiums. It kind of gives you an idea, and actually, I think sometimes motivation to really get in shape before the paramed. I don't know how long that'll take you to do, but it's interesting. You can get it, and it's going to tell me, here's the actual underwriting class that I'm quoting. Now remember, when you take the Part 2 from the client, which is the medical doc, which we've talked about before, heads up, if you see things in there that cause you to say, wow, I don't know if he's going to get preferred elite, then don't show it. Because all you're going to do is set an expectation that the client's going to wonder, wow, you told me this price, and are you doing a bait and switch? So always before you quote it, say, based on what you're telling me, but I'd like to do a Part 2, and I'd like to give you walk you through a basic question and answer about your medical history and about how your health has been. And after that, I'll make my determination if we think it's a pretty good idea to qualify for preferred. It'll also tell you not only the death benefit, but now we're back to what we were talking about yesterday. We're talking about the actual, what option did I use? In this case, I'm using level death benefit option. My level death benefit option is where I've asked the death benefit to stay the same throughout the time of the contract. It's a permanent contract, that's where it's going to stay. It's possible that the cash values could accumulate great enough where it might bump up the death benefit a little, but for our sake, basically, level death benefit option 1 in this illustration. And based on what we've talked about, it talks about the guaranteed period. Now remember, we're talking about a current assumption universal life. So, but it still has, this case, and many of our current assumptions still have base guarantees. Not out to age 100, not out to age 120 or the endowment or maturity dates, but at least they have some time of coverage based on that premium. The required minimum premium on this contract is $1,193 for our $1 million face on our 45-year-old preferred elite. It also gives us our guideline premiums for our guideline annual and single, as well as our 7-pay test. And it also gives a nice little idea here about assessing your cash values. When you take loans against a policy, that becomes our net surrender value. So when you see that, you're going to say, wonder what my actual surrender value is. Well, you're going to have your surrender charges coming off the top of that, but also, did you take any policy loans? And heads up again, if you're going to take policy loans, just remember everybody's different. Some carriers use zero net cost loans, some wash loans, some spread loans, some direct recognition loans, some participating loans. And you just want to make sure which one is going to work for you. They're not all consumer friendly, so you just got a heads up on that. Also, when you take withdrawals from your policy, as long as you maintain a minimum net surrender value, you can do that. But again, if you have gain in the policy during the first 15 years, you may be subject to ordinary income tax. So do nothing until you actually find out, get an in-force ledger, and then have your tax advisor tell you yes or no, are you going to have it? Because it's going to be based on how many premiums I put in, i.e. basis, versus what am I going to take out on a contract dated after 6/21/88. And of course, that's been years ago, maybe decades ago for me. Also, accelerated death benefit options. Here's an interesting, they have 2 accelerated death benefit riders available at no additional charge to the client. These riders allow you to access a portion of the death benefit while you're still alive. One is based on terminal illness, where you could get 80% of the death benefit up to $250,000. Now, we're showing $1 million of coverage here. So this rider is a great rider, but it only covers the first $250,000. So if you had imminent death, if you had a prognosis that you had a terminal illness, you may be able to withdraw up to 80% of $250,000 while you're still alive. It also has a nursing home confinement rider. Again, a lot of carriers have all these riders. We'll get into that at the very end of the workshop about a month from now. And the nursing home confinement, it says, again, no cost. If you have been confined in a nursing home care facility due to a chronic illness for a minimum period of time and are expected to remain there for your life, you could withdraw 80% of the death benefit, again, not to exceed the $250,000. These are nice little perks that you're saying, well, I thought I bought the life insurance for a death benefit. Well, it has 2, in this case, some of them have more, 2 living benefits that you may want to look at. And remember, although there's no additional charge for these riders and they're added to your policy, should you need them, an interest discount and an administration fee will apply. So if you have to access this, there's going to be a charge for that. But I say, hey, I don't think I'm going to do that. It costs me nothing to go ahead and have this online. And if I have to pay a little bit of fee, I think that's totally worth it. Overloan protection. Now, a lot of carriers went to this technology. Overloan protection says, I went to go and I borrowed money. And I borrowed the maximum money. And what happened was, I noticed that my contract is no longer going to be enforced because I just maxed out so much. I took so much constructive receipt and policy loans. So what they're doing now is they're trying to put into a rider where, in this case, and many carriers use this, a overloan protection rider, so that if you go too much, they'll make sure that it never actually goes out of force. You may have reduction of benefits, you may have your income go down, but at least you won't have any constructive receipt on tax issues like this if it's kept in force. And the bigger issue is some of this death benefit, some of this coverage is going to stay online with overloan protection riders. They also give you a bailout rider. Now, not everybody does this. This is a little feature of Lincoln Benefit. Handful of them do this. It says if the current cost of insurance rates, remember, this is a current assumption product. If the current cost of interest rates are greater than the rates in the current COI or cost of insurance schedule when the policy was issued, you'll have a 60-day period to surrender. So when you think about that, I may have a bailout provision. If they try to jack the current rates up, and I have a period to walk out of it, I say, I think that's too punitive and I can do better someplace else, I could actually walk from this contract. So I wouldn't have any surrender charges. I think that bailout provision is a huge one. And again, like all these contracts, they have so many additional riders, whether it's ADB, continuation of premium, waiver, child, term, spousal riders. All these are available. And lastly, the maturity date. What's the maturity date? Well, in this case, this contract's 121. Be careful, they can go all the way down to 90, 95, 100. All the maturity dates and endowments are different from carrier to carrier and product to product. Be advised, that's a good thing. But here it is, and this one, current assumption, 121.
This has been an Edutrainment Workshop, the educational division of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance. and sponsored by Lincoln Benefit Life, an Allstate company.